children. Howard Lindzon here with a bad voice. It's a gift, really, for everybody else. Welcome to Trends with Friends. And I'll get right into it, but first meet the regulars. Looking really good with the Stocktwits logo. Michael Parekh, how are you doing, buddy, in Houston?
Hello, everybody.
And then we have Stephen Miller, being played by Phil Pearlman. Stephen Miller, how are you?
Fuck you, man. Fuck you, baby. Come on.
And then we
You
have,
did it. You did it. Okay, I give you credit for
here's
that.
the thing.
I'm like, please don't call me Stephen Miller. He's like, Stephen Miller, my man.
Phil knows that if you tell me don't do it, unfortunately.
Man in the high castle.
By the way, it never connected with me. And Steve Miller would be lucky to have a wife like you and a couple of unibrow kids like you do have. And it is a hereditary thing, unibrow. So the other thing is, what a week. And then joining us from Team Stocktwits, the man, the legend, Tom Bruni. He's in charge of, a couple million emails a day of readership. And
yeah, just a bit. I fancy myself a regular. I've been a Stocktwits user since 2012, 2013, and now I'm on the other side. So super excited to be here.
When did you get the courage to just talk out of turn like that, Phil?
I know, right?
You are a guest. This is not your show, Tom. You will talk when you're spoken to. I lost my voice. It's a gift that keeps on giving. Masters Week, everybody. LA Golf. I'm going to pimp one of my personal investments. I saw Bryson last week in LA. I think I gave, hopefully he gave me what he had, and I did not give him what you had. I think you heard my spitting in the mouth of Josh Allen moment as well. So sadly, I think Josh Allen has what I have too, might miss the season. All right. So Bryson will be playing his new driver that I also have. And so that's pretty exciting that one of the best players in the world built his own club and he'll be using it at the Masters. Okay. So that's one of my big weeks, Masters Week. It just happens to coincide with the dumbest stock market crash ever, which Phil is going to take the lead on, and what Le Shrub on Twitter calls Orange Monday, which is fucking hilarious that now Trump has its own Black Monday day. But first, some housekeeping. If you guys could pull it up, the Hashtag Awards, our winners are set. We have 14 incredible awards winners to be announced soon. Voting was done by the community, both on Stocktwits and FinTwit. And Francis Ellis, who I've never seen live, should be roasting all of us. We're going to have about 400 people at the stand. There's still tickets left. I think it's going to be sold out and just overflowing with FinTwitters and people who love the markets. One of the most exciting things is we're treating it like the Academy Awards in that there's just going to be so many giveaways and bonuses. Everybody should be getting a Manscaped. Everybody will be receiving some LA Golf stuff. The winners will be receiving special LA Golf gear. They will also be receiving Comos tequila, maybe with a special bottle. Comos is probably the highest ranked. Again, I'm an investor, but it is seriously the highest ranked tequila in the world right now. And then my friends at Ari Soho, probably the best fashion designer in the world, created a little gift bag for our winners, probably in the $3,000 to $5,000, and maybe as close to $10,000 in prizes, giveaways for people in the audience and our winners. And so I'm really excited to hang out with 400 people from FinTwit. Phil will be there. Michael Parekh will be there. Hopefully JC will be there, but of course Tom Bruni will be there, I think, because you'll be coming in from Long Island.
Yep, absolutely.
All right. Really exciting. Okay. Phil, take it away. We got so much to talk about.
Yeah, Tom, by the way, great to have you on. You do amazing work. The Daily Rip is
no response here, Tom. You don't need to respond.
Daily Rip is a must read. I have a quick plug. I'm going to be doing a webinar tomorrow with the CMT Association called Fitness Alpha. Get yourself healthy, perform better in the markets. Fitness Alpha for investors and traders. I'm going to cover a little bit about the psychology and what you can do, given the situation that we're in right now with this high volatility and the sell-off and everything. Today's episode is the stupidest stock market crash ever. Unforced error, man-made, on purpose, secretly. Who knows why, but we do know that it is extremely stupid. We're going to get it, and we'll get into that. Let's just start really right off the bat with maybe just a look at a chart of the Qs or the SPY of the S&P or the NASDAQ 100. Do we have that, Keith? Did we ever make that? Okay, yeah, there you go. I mean, duh. How stupid is that? Just look at that. We've had a really nice sell-off. We're rallying like crazy this morning, but the Qs are still 100 points, more than 100 points, or 100 points off their high from just 6 weeks ago. So how fast we've fallen, even with today's action. Tom, thoughts?
Yeah, I think big picture, one of the themes that we were talking a lot about and what we're seeing in the community is like coming into the year, what is going to be the next catalyst to bring this market higher? I mean, January we had, fart coin, we had, S&P making new highs. We had basically everything going for the market. Everyone was looking at Trump's policies and saying, hey, this is a new golden age of America. We've already had 2 back-to-back 25+% years in the S&P, and we're ready to continue it. But a lot of the questions we were asking, the community was asking, is valuations are high, earnings growth has been solid, like how much better can things get? And then finally, there was just a lack of a bullish catalyst. Like what was going to be that next thing to take the market higher? And we just never got it. And instead what we got was this massive global upheaval of the economy, and people are rightfully a bit scared.
Michael.
No, I think, look, the stupidest chart in America is a good moniker. And I would obviously, it goes to the administration, etc. I am glad to see a little bit of dissension in the ranks in DC.
Imagine what it took. It took $12 trillion to get Elon to say something,
and Elon to specifically go after Navarro, who literally architected this
complete idiot.
Anyway, it's the world is speechless. Aside from the market volatility, what we do not see is the impact on Main Street, the uncertainty that we are going to be saddled with, regardless of how U.S. negotiates with China and 60 other countries, 100 other countries. The uncertainty is extraordinary over the impact of that on the real world.
Can I walk you through 3 examples, and then we'll go
please.
right back to you? L.A. Golf, where's the club's going to get made? A lot of it in the USA, but the new driver. So Bryson DeChambeau, an American superstar, right? LA Golf's going to have to go out and raise hundreds of millions of dollars in the next few years. How do you tell your investors what the price of your cost of goods is going to be? So that's just one startup example of a company with America that started in America, right? The second example is Manscaped. Of course, they get their product from China. Who cares? It's a man ball shaver, right? Are customers going to put up with 34% price increases? No. Again, I'm just telling you what's going on. And then thirdly, even at Stocktwits, will advertisers be willing to spend if they know their volumes are going back? So you've already had, this is why the markets are forward looking. The markets are trying to price in how much business in Main Street America. We can all laugh, as Trump is, at how much money Bezos and Tim Cook have lost. We can all kind of smirk and say, okay, this was kind of a joke at the valuations. But Main Street America is totally on the retreat. And this was a complete self-own over what? Like, we don't even know what the plan is yet. So, Michael, continue on with this.
No, and then if I look at it just in terms of my narrow frame of tech and AI, we have probably put back the promise of AI at least 5 years. At least
why?
5 years.
Explain that.
First of all, right now, every major Mag 7 has been spending tens of billions, now 300 billion cumulatively this year. Just there, in terms of what's going to go in the ground in the next year and a half, the amount of compute that's going to go in there is by definition going to be 20, 30, 40, 50% less, because for the same $10 billion that you're going to build up an AI data center in Abilene, Texas for OpenAI, you're going to be buying, by definition, fewer chips, because the chips are going to go up. 30,000 is going to be 40, 50,000 per GPU from NVIDIA. Now, all of that is getting passed on in terms of the cap budgets. So that's number one. Number two, on the consumer side of the equation, I'm glad finally the sell side analysts on Wall Street, like Dan Ives from Wedbush, are now, who've been huge Tesla supporters and Apple supporters, but Tesla particularly, are now saying this is Armageddon. They're now talking about $3,500 iPhones. And I think they're low, because physically, at the scale of which iPhones are getting built, you cannot build them in the time frames that we're talking about in the US. Apple is literally scrambling, and I had a post on this a few weeks ago, that they were trying to get from 15% of the iPhones assembled in India to 25%. They're obviously trying to rush that. You've got people like Lutnick around Trump who are saying millions of Americans are going to screw iPhones together. They have no conception of what they're talking about in terms of building these things. This is going to put you're totally right, Howard. If people are going to balk at 30-40% price increases on shavers, we're definitely going to see it on high ticket items, which means without the compute, whether it's in data centers or on your iPhone in the next 2 or 3 years that has the GPUs, you can't do all the cool things we're talking about with AI. And it's just postponed. It's postponed. And by the way, this whole thing was about race with China. You couldn't give a bigger gift to China on a silver platter.
Honestly,
we're curbing their supplies, but we gave them 5 years to race ahead of us. Just did it in the last 4 or 5 days, and they're going to absolutely race ahead of us. End of story.
And their country has been trained to not respect. They were the original degenerate economy, right? And Z has smacked them in the head so many times that if Alibaba drops 50% or 70%, no one cares. Okay, Trump thinks that we have the same resolve here. Like it's just absolutely delusional. Phil, from a behavioral...
China market, I just want to run one point. China market is less than 3% of the global industry. I mean, 70-80% of the world investing in public stocks. They're talking about American stocks. And we shot ourselves in the foot, head, and everywhere else, just on that front. And this is not about medicine.
Yeah, it's behaviorally. What are you seeing here? Like, what's your diagnosis?
People are not fully rational animals. And so we do things for all kinds of different reasons. And, I really have no idea what's going on in the mind of our president. But if if I had to take a stab at it, it just seems like vengeance. It just seems like, listen, I'm going to take this whole thing down and I don't really care. And then I'm going to make out, so on the back end,
and my family,
me and my family are going to make out. We're going to get rich or whatever his, and we're going to make sure that everybody else pays the price. And so that's just,
That's what I think. And here's why. He has the press on the plane that he wants. He has the press that he wants. They're asking about his golf game. So he's got everything that he wants, and he's loving it. I don't think he feels pain in the way that a regular human being would feel pain. So let's explain this. You have $100 million. Okay. People do have $100 million. I know a few of them at my club. They lost $30 million. Okay. That's what they're down so far. If they're just invested like the average person, they've lost $20 to $30 million, forgetting about their business and all their speculative investments. Okay. he doesn't care. Me, I tell you, those people care. I tell you, their mood's going to change, right? And that's the money multiplier effect, and the psychology of all this is real. Like home prices are going to come down. We're going to go from an inventory problem, which won't be solved, to a high-end inventory problem where people that overbuilt. So it's not the right homes for the right people. So we're going to have all kinds of chain effects that are going to further affect psychology. And he's enjoying it. The only explanation I have as a non-psychiatrist, like I'm like you, Bill, is that somehow he is going, they voted me in. This is what they wanted. And the saddest thing about today in this rally is I think we're rallying because he said, let's give $1 trillion to the military as a kind of like, look over here, I'm a patriot. When that's exactly what he was supposed to run on, and Doji was supposed to deal with first, is go look at the budget that's the biggest, right? When you come into a startup or you come into a company, the first thing they cut are the biggest places. You go look at the places with the biggest budget. You do some easy stuff, of course, you get some wins, but you go look at the biggest budget because that's where the money's going to come from. And instead, he just signed the biggest $1 trillion budget while the market's crashing. So Americans like that. That's why the market's up. I don't know. Like, I'm not saying it's right or wrong. That's what America likes. That's his form of pain relief here, is to say, I'll just give the market what it wants without dealing with the real issue. The market hates the tariff idea. And so I'm really worried about that.
Let's go and look at the chart of the day. Or no, actually, it's the most interesting chart in the world. We have two charts for the most interesting chart in the world and a little perspective. We have the VIX and the social VIX. And so we'll take a look at both of those. And so Howie and Tom, it's great to have you here. You could comment as well. Is there a distinction here? Is there a reason we're showing both of them? What's going on here?
And Tom, take a shot, and then let's also, if we can, put up the social VIX with the regular VIX, just so I can explain to people like how I use both. Right? Okay.
Yeah.
Tom, take your first shot talking about either.
Yeah, just taking a step back, right? The volatility index basically measuring, what people are expecting in terms of a percentage move for the S&P 500 over the next 30 days. So the higher the VIX, the higher the volatility expectations are. The social VIX, from my understanding, Howard, we essentially created that same kind of framework using messages from Stocktwits to define how scared people are. What are their volatility expectations? Are they positive? Are they negative? So obviously, the higher the social VIX goes, the more scared people are.
Correct. And so the social VIX is more of fear and greed, which CNN did a good job way back. This is just a very fresh, unique look at fear and greed. So let's go back to the VIX here, and we can all comment. The original VIX, okay, which is really a beautiful measure of fear. It means nothing to me 99.9% of the time, which is what the beauty of some of these charts are, meaning you never have to look at it until it spikes. Because when it spikes, you want to see relatively what fear is like. So we have in 2008, the great financial crisis. You can see the spike. We all know why it spiked. There was a global problem with mortgages, right? And banking and lending and corruption. I don't even call it corruption. It was just stupidity. But it was a global stupidity, right? And it led to leverage, okay? Which dawned the era of social leverage, the name of my firm. But it dawned the idea of like, financial leverage is a tactic, not a strategy, okay? So we've avoided that type of problem. We could talk about the government debt, whatever, but we've avoided that type of problem. Maybe we've tricked ourselves. Then in 2020, we had COVID, which is the scariest thing I can remember. The financial crisis was scary in that I was young and I wasn't rich. So the COVID crisis was like, holy shit, like my company is going to be able to even operate the next day. So that was a different type of panic. It was a pandemic, whether it came from Wuhan, which, the clinic, or a rat's ass in a sweatshop. We could argue all day long. The point is, COVID came, killed millions of people. The spike happened. it was a great buying opportunity. Most importantly, 08 was a great buying opportunity. Buffett came out in March 09. A lot of people, including me on my newsletter back then, it just felt like a buy. 2020, we started Panic with Friends. We said, this is a generational buying opportunity. I think the difference there, and we guys can all debate it, is the whole world was rallying, meaning no matter how bad policy was, it was obvious what needed to be done, and everybody bought into it as badly as it was communicated. Flash forward to this VIX spike. This is literally different than the other two because it's not a financial contagion. It's not a virus. As John Stewart shared last night, and probably the best masterpiece of editing and financial commentary in his 20-minute riff, it's like Trump came with a box of COVID, showed it to him, and went and just blew it on everybody in the world, right? Look at me, I'm holding COVID, and there's no reason, right? There's no reason that Manscaped prices are up 34%, or anybody from Vietnam and Lulu has to. It just makes no sense. Now, does it make sense to roll out something with the strategy? It's like, let's get our manufacturing up. Let's set up incentives. Do we want razors made in the United States? The other thing that, Mike, I want you to talk about is how expensive, how small companies aren't going to be able to go get meetings with the president and get that. So this was a man-made VIX spike. The next chart, and then we'll go to Mike. The next chart is the social VIX, which so yesterday I was a buyer because as much as I hate what's going on, a VIX spike to 45 is something that I buy. The second thing is I overlaid it with our social VIX, okay, which is hit. Now, again, the site dynamics change, younger people in the market, so this fear could be greater than, and we're seeing that the fear was correct and that people were getting negative on Stocktwits in early January and February, right? You could see us starting to move up. And what's different about the VIX spike versus a social VIX spike is it's kind of like that. It's not a spike, it's mob negativity behavior. First it's Elon, and then it's this stock. And then, so the negativity really peaked a few weeks ago, right? Almost before the real crash, right? And then we had this little relief rally. And now we're seeing this spike, which isn't as high, meaning good traders are realizing that, what Michael noted earlier is that policy, people that were on Trump's team are dissenting, meaning the negativity probably should have peaked when Trump should have fucking dealt with this a month ago or 2 weeks ago. And now people are saying he might be forced to deal with. So again, I feel like if cooler heads prevail, we can put in some form of a bottom. But again, based on what I'm seeing every day, not likely. So go ahead, Michael. So that's how I use those two overlapping. And so the VIX that Tom is explaining is very different than the social VIX, because the social VIX is based on people watching the tape and messaging accordingly. And what I think is interesting about our social VIX is it really was early. It was really the mood of the people was changing in January and February ahead of the spike in the regular VIX. And that's important. That means that our social VIX has a lot of ability to kind of get in front of these panics. It's not perfect, but I think it proves that an audience of people that follow the markets, okay, may not be able to measure volatility, but sense a rat, that sense a point of stress. And I think that's pretty cool. Okay, Mike.
Thank you. Now, I will just point out, since we're talking about dissension in the ranks, I'll highlight two bookends on dissension. They're both super visible. One is Elon Musk on one end, and Bill Ackman, the hedge fund guy, billions of dollars, etc., who went from being and is an ardent Trump supporter, but in the last few weeks, days, you should see, he's been actively proposing ways for Trump to step back by saying, "Oh, let's put a 90-day pause on this, and allow the countries to come one by one and negotiate." This is exactly what Trump wants, right? And he's the bigger point on that is he's literally transformed the global economy to one where everyone comes and kisses his ring. He loves that. But the reality is America did not become the biggest economy in the world, 85,000 per capita. Our poorest state, Mississippi, has a GDP per capita before this nonsense higher than Germany, Japan. I mean, it's extraordinary how much wealth we've had on the services layer of the US economy, which is 70 to 80% of our $29 billion GDP before this nonsense, and 10% from manufacturing. So my point is, he basically wants everyone to kiss the ring, not just the countries, which Ackman is saying will make room. 90 days will give enough room for 200 countries to come and beg and get, negotiate tariffs. But it's more than that. Every CEO in the world is trying to figure out, how do I get to DC? Okay, if you're Mag 7, you can go to Mar-a-Lago, etc. Okay, but Manscaped, their CEO cannot go to DC. This is not how American capitalism works. We are amazing because we allow anyone to make anything. And I just want to finish one last point. Elon was actually, I'll agree with him on this thing. He put up a video on his Twitter feed from 1985, Milton Friedman talking about the pencil. If you guys have not seen this, go watch this thing. It's basically Milton Friedman saying
the graphite was made in Malaysia, right? Stuff like that. Yeah.
And the point was, no one had to make an appointment with Donald Trump to make that pencil. Today, everything going forward is dependent until he's in power and his people in power to make an appointment. That means that the U.S. GDP growth, innovation, etc., whether it's AI, tech,
it's already
industry,
stopped.
It's stopped. It cannot work. It's beyond the first 200 because the bulk of the wealth of this country is from the bottom, and we're we're not an appointment set of capitalism.
Yeah, here's my point. This is only going to distort this things further. Yesterday, a couple smart, I really was pissed. A couple smart VC friends of mine or seed investors are like, oh, this is going to set off. Now all the VCs are going to put their money in seed and prices are going to go up. Dude, that is the last thing we want, is inflation at the startup level. Capital has been misallocated during ZIRP for 10 fucking years. And now this, at a time when we don't have ZIRP, we're going to have further cap. The whole point of rising interest rates is to get people focused on proper allocation of capital. And so what he has done to dumb people that have money to allocate is make them think I need to chase deals, because now Andreessen, who had billions to do, is going to put 5 million into this startup at an over. So we are taking a zombie startup system and maybe adding 10 years onto that with dumb money. So we will fall further behind. Again, this is what's so upsetting, that people, these false prophets, are out there with capital that do not understand what the markets are telling you. The interest rates are telling you to behave. They're saying there's money elsewhere. And if you force if you force Bezos and Gates to keep their money in, and Warren Buffett to keep their money in T-bills, which he's not stupid, that is what Warren Buffett's doing, the money multiplier drops to 0. Okay, however many billions in cash that he would want to deploy in a regular environment. That's what Buffett is saying. And Trump had the nerve to say Buffett is on board with him at one point, right?
And Buffett had to say that
he
that
wasted
was not
Buffett's
true.
day having to go out, even though Buffett should be focused on, Trump should be saying, what will it take for you to deploy 300 trillion, whatever fucking your balance sheet is? What will it take, Warren, for you to part with T-bills to put the money to work in the United States? How about that meeting? Has that meeting happened?
I know what it takes because I was at
call a meeting with the guy.
5% preference shares that Goldman had to negotiate with Buffett.
We're a long way from that. He'll let the shit fall anyways.
The bottom line here, guys, is that if you're interested in shaving your balls, you should get the Manscaped now before the prices go up. That's one point. The second point is our greatest risk right now, it just feels like, is karma. Like the rest of the world and karma. Yeah. Okay, Tom, you brought us a chart. We're going to go.
I got to
go ahead quickly, Mike, because we got to move ahead.
I just want to point out, in terms of how small companies, medium companies need to deal with this. I put up this on my Twitter feed. Fabletics, just a random company, they started to put invoices where people pay for things. There's a tariff surcharge line. So it's a $400 item. It says $44 for tariff surcharge. We need that. We need companies, so Manscaped, etc. They need to put a tariff surcharge line. Why? Because consumers, regular people, need to know
how they
what
were
it is,
fucked.
because most of them do not understand that tariffs is a tax.
Yeah.
It's too technical. It's
Okay.
just this is very important.
One more thing.
Brilliant
people should
idea.
know. One more thing people should know, Phil. Nuclear. Whatever is important in the next 10 years, trust me, who will be on the cap table? It'll be Barron. It'll be Don Jr. It'll be some numbered company. Every nuclear company, and I know this, and I'm not going to name names because there's a few that I've heard from the teams, okay, because it's a small world, have to take Trump on the cap table. Guess why they have to take them on the cap table? Because if they don't, okay, so you are corrupting the least corruptible people in the world right now via cap tables.
It's
And
the U.S. version of
Andreessen
the
and
golden
these guys can look the other way. But we are going to be asking some very honest people to look the other way over the next 5 years while the Trumps and their ilk get their hands on cap tables. That goes to David Sachs, Chamath, the worst people you want on a cap table. And again, that's just an opinion, but you can watch them every day on Twitter. Chamath is talking about a Mar-a-Lago summit. What the fuck does an immigrant who is goddamn lucky to be in this country and made money on Facebook endorsing the idea that we should go kiss the ring at Mar-a-Lago? And again, if he wants to force China to kiss the ring, I don't know, over my pay grade. If you're going to force LA Golf, Stocktwits, Manscaped, thousands of other companies to figure out how to get a hold of the president because there's only one TV show and there's only one channel, it's QVC, and we want to go back to 1996 and how to get my product on QVC. You know who got rich on QVC? A handful of fucking people that had best-selling products in QVC. Okay. And you know who got paid minimum wage? The people answering the phone so Betty could order a product from QVC. So if that's what people want, that's what we're going back to. And it's fucking brutalizing. All right, Bruni.
I hate to admit this because you never shut up, but the best Howie is the ranting Howie. It's fucking awesome. Okay, let's move on though.
It's so dumb. It's so dumb.
Tom brought a bunch of macro charts, got a ton of stuff for us. The one I'd like to lead with, go out of order, is slide 12 because it links back to the conversation we were having about the VIX. This is from Honey Stocks. And I don't know if it's true or not, but it's a really provocative chart. And if you're going to have a sort of a bullish signal, this would be it. I'm not endorsing it. I'm just saying it's a good observation. Tom.
Yeah, go quickly on, excuse me, on Michael's point. There was a rumor this morning, an exclusive from Yahoo Finance. Micron is going to be adding tariff surcharges starting tomorrow. So wow. It's happening across the board, across industries. And, when consumers start to feel it, when earnings start to get hit, that's when these companies and people are going to make a lot of noise. But anyway, going back to the volatility index. So this is from a user, Honey Stocks, on our platform, does great technical work. Again, like this is not necessarily a signal for like, hey, this is going to be the exact bottom, but there are general ranges in the VIX where you can look and say, okay, if the VIX is above 50, above 60, right? Like generally, if you hold your nose and buy stocks,
yes,
3, 6, 12, 24 months later, you will be in a much better position than if you were panic selling. So yes. This chart gives you some general ideas, VIX below 12, complacency, the market's trending higher, not a lot of volatility. You get to the 12 to 20 range, you get a bit of a pickup in volatility. Above 20 is when you start to, adjust your mindset if you're a trader, right? Breakouts start failing. You're seeing more breakdowns. You're seeing new stocks hit 52-week lows. That's when you get into kind of the danger zone. And then this week and last week, when we see these massive sell-offs, liquidation events, that's when you get the VIX at its highest level. And when there's max fear in the market, that's when you want to be looking for opportunities.
It's the opposite, guys. Phil knows this because he's a professional. One of the best traders I know is Phil. Why have Phil and I be friends for 20 years? He's a fucking student of doing less. If you are not excited about VIX 45, as painful as it is, until you learn to study a few charts a year. There's a couple times a year if you're lucky. If not, you're really lucky. But if you're lucky and want to put money to work, You are rooting for VIX 45. Now, are we rooting for the way it happens? I can't explain that. This is the worst VIX 45 than I can imagine. Why? Because I have so little confidence that we are on the same page, that this country understands the dilemma that it's in. There has never been a more voices yelling the dumbest things that have followers, from Tucker Carlson to Peter Navarro to fucking Trump to the press crew that he's accepted into the amplification that's going on. This is the weirdest. I will say this. I am any other time it would be all in right here. This is the moment where any cash you have, you put to work. And I know, Phil, you would say the same thing for different reasons. This is the point where you would be adding to your VTI or your VU. And you probably did. I did. But what I'm saying is I sold everything this morning and I shared the trade. Because why? Because the answer to this was this was an orchestrated rally. What he thinks drives the market, which is he has the answer. $1 trillion. He just took another shit on Elon Musk and Doji. Any credibility Doji had to eventually get to the Defense Department is fucked. So this VIX 45, be very careful with. Not that the market will go lower, but that we haven't solved anything that got us into this crisis. And in fact, we're further behind. Go ahead, Bill. You must have so much to say on this.
Listen, here's the thing. Nobody knows where the market's going. And these types of events are not really events, they're processes, and they play out over a period of time. And we have analogs, right? We have the financial crisis, we have the NASDAQ, the internet crash, we have 1987. These things take a while to play out, and they require patience. They require humility. They require risk management. And it's always different this time. Every single time, like exactly what Howie was saying. It's like VIX 45 you should be buying, but it feels so bad because there's so much incompetence. It's a very difficult situation. The first thing that you need is a plan, right? And if you don't have a plan, you shouldn't even be involved, right? Yeah. And by the way, if you're dollar cost averaging in your 401k,
you have
automatically, as a result of, when you get a job and you're working there and they set you up and you sign some papers and money goes out of your paycheck every month or every quarter, and your employer matches, that is a plan, right? That is a long-term plan to capture investing during these moments. But what I will say is that we have no idea where the market's going to go. So stop guessing. It's highly, highly emotional. It's a very stressful and difficult period for everybody. What I would say in addition to that is that if you want to have better control over your emotions, and if you want to have better control over your impulses, and if you want to increase your sense of agency, get yourself healthy. I mean, that's like my whole preaching thing. It's a whole Fitness Alpha thing. Get healthy, perform better. That includes market behavior. But there's no simple answer here. This will take a long time so this morning, for example, we had a situation where the market's going higher. And everywhere on my Stocktwits feed and my Twitter feed, I'm seeing people saying, hey, is this the bottom? This is the bottom. Oh, we caught the bottom. We're catching the bottom. And that's really just magical thinking. That's really just wishful, fantastical thinking, or hopium. The kids will say hopium. It's really just hopium. This is just one day of trading within a process that is going to play out, and it's going to be very frustrating. It's going to be very taxing on you emotionally. Do you have to buy? Well, I think
you have to. If you are an American and you have capital that you were waiting for, and the VIX is 45, and you have to have belief that the center will hold. Doesn't mean you should go all in. It means if you are not willing to buy at the VIX is 45, you are not going to be a good investor. And I say that out loud. Oh, what do we got? Breaking news.
Justice Department says it will pull back on litigating cryptocurrency fraud. Just think about the enormity of that in terms of everything that we're talking about. Not that, this is Wild West. It's like, forget going back to smooth Holi. This is like,
Yeah.
you do something illegal, good on you. This
We
was
haven't even gone to the fact that he released Nicola, the guy. So I'm saying he's relieving past financial frauds, meaning he's setting the stage for a coup. Everybody warned us. Again, it's slow motion. It's speeding up right now. Even though Phil is correct. If you believe the center will hold, and you should learn to do this, and you believe in America and what's left of the system, okay? And it's scary to see the Chamaths, the David Sachs, the Mark Andreessens kind of turn on innovation in the way they've turned. It's all about my innovation. It's all about, as long as I'm in control, innovation will work. So it's very different.
I'll just add one thing, because we're talking about tops and bottoms and buying opportunity, etc. That those are market things that's above my pay grade. You guys are the experts on that. For me, it's like one near-term thing I want to see is a pulse from Congress.
Yeah.
That a handful of people in the House on the Republican side and the Senate literally say vehemently that this right to do tariffs is Congress's purview.
Yeah.
And they are all quiet, obviously, for political reasons. Until we see a peep and a realistic peep out of that, there is no turning back to this.
And I would say, Phil,
Hey,
the
Tom,
other day-
go ahead.
Go ahead.
Let's get to Tom. Let's do these, because he's got a bunch of interesting charts. It provides perspective what's going on globally, and I just think we got to go there.
Yeah.
Tom, you got Japan here, you got Germany here, you got the VT, which is the Vanguard Total World Market Index or whatever it's called. Why don't you just take us through sort of a perspective, backing up the lens so that we have a global perspective?
Yeah, we'll go quick through here. I got 5 or 6 charts just about the macro environment. And Keith, can we go back to number 6 real quick? All right, so let's just take a step back, right? Like, let's talk about the environment we were in heading into this year. We had a lot of extended stocks. We had crypto going crazy. We had betification of everything. We've got investors with their highest stock allocation in history, right? So, I mean, we were a full-on bull market, right? People were looking for opportunities outside of the US. And I was looking overseas, and people looking at Germany and some other European countries and saying there might be value here. And from November to February, we saw the German DAX go up 40%.
Wow.
So from a risk management perspective, what I want to show here is that if you do some basic like backing up, you can save yourself a lot of headaches, because what we're looking at here is basically the German DAX up top, a weekly chart going back 25-ish years, 20-ish years. Then we've got the RSI, which is a momentum indicator. Basically, when it gets too overbought, that's a sign to back off. And then on the bottom, we have the percent away from its 200-day moving average. So how far away is it from its mean? And so as you can see, each time we got towards 20% away from the 200-day moving average and overbought in the RSI, we typically saw a correction either through time or through price. And so I was stepping back and saying, everyone's bulled up on Germany. Foreign stocks are finally outperforming. Is the time to be adding now? What is the next catalyst? It's already at 40% in 4 months. What is the next catalyst to get it that much higher? So, flash forward, we've got a 15% correction over the last 3 weeks since I posted this. So from a risk management perspective, you don't have to be an expert. You can just use a couple of these key tools to just identify when is risk elevated. When should I be adding, or when should I be, as Howard likes to say, panicking? It's a much better time to panic at the top when things are extended than it is to panic on the way down.
To Tom's point too, shout out to people that follow price. There's too much mudslinging of people that follow price only. And I think Phil and I, who are basically fundamentalists, and Michael, are top bottoms up people. I'm both. I'm bottoms up, but I still have to see the price, and I still have to look at prices. I don't think people give enough credit to young people or old people that have looked at prices their whole life, from Helene Meisler on Twitter to Dr. Stocks and JC and Tom, meaning you didn't need to know what was going. You didn't even need to put a country on this. Okay. This is what tops and bottoms look like across every asset class. When you look at dispersion from the mean and overbought, oversold alone, any of these things means nothing, but combined over history of looking at patterns and human behavior, They mean an incredible amount. And it's just why Phil would say, don't try and time the market, because if you're going to go in a bull market, they last for hundreds of percent. You don't have to catch the first 10 or 15% of those bull markets. But you have to understand that there are people out there like Tom who are poring over these things. And this is who you're up against. You're up against all this data and expertise. And so that's why I point out when the VIX is 45, things have a chance of moving around and money is getting displaced from weak hands to strong hands. And as Tom was saying, Germany was literally available to be, it was in too weak a hands at the top. All right, next one, Tom, keep going.
Yeah, so next chart, we can apply these same exact tools on the downside, right? People are looking to identify when is the bottom coming. So here we've got the Nikkei. I think I made this chart a day or two ago when, volatility was high, but essentially, you've got a very clear support level, 31,000. On the downside below that, you've got 24 to 25,000. But, just looking at the basic conditions, right? We were down, I don't know, what was it? 8,000 points in a matter of weeks.
25%
on the Nikkei.
Jesus.
25%. So we're 20% plus from the 200-day moving average. We're the most oversold since COVID. So if you're taking it, and prices are at a logical level of support. So again, is this a go out and buy everything signal? No, but it's a red flag that, hey, if you're short or you're pressing here, probably not a good place to be doing that. And if you're looking to add long-term exposure, maybe a place to do that or trade it for a bounce. So this is the type of analysis we're seeing people do in the Stocktwits community. They want to manage risk and understand where can I take shots without getting my face.
Putting this into context, people, when you see panic, flock to people that talk about price. Okay, people take a lot of cheap shots at technical analysts because the name is bad. It's people that study the behavior of price, and when you study the behavior of price, it removes all the nonsense from your head. It becomes about your risk and your risk management. And what Tom is saying to a layman like me is, as what Warren Buffett said, be greedy when others are fearful. People are fearful right now. If you are going to be greedy, you do it when other people are fearful. Not should you do it, but if you're going to do it. And then if you're going to do it, as Phil was saying, what's your plan? How much am I risking? And it's not always going to work. But the reason you do it when other people are fearful is because you have a plan. And for my 20 grand or 100 grand that I'm willing to risk, I'm going to make 3 or 4 times. You want to be able to make 4 or 5 times your money for the risks that you're taking in any trade. And in a fearful market, when you can be greedy, it like my overnight trades, they can become 4 or 5 times much quicker, which you get the bang of the buck of 2 days that makes up for years of return. So again, a lot of this is just like Africa, tigers waiting until they pounce. You are looking to follow people like Tom who are sharing this stuff. And there's only a few times a year where you need to be fearful when others are greedy and greedy when others are fearful. And you should try and do the dollar cost averaging, what Phil says. But there are a couple times a year when if you learn this is the easiest way. It won't feel good. It'll never feel good in your stomach, but it is the easiest way to add returns. And this is all what Warren Buffett is saying. Why was he raising cash over all these years? Is for this moment. What is he waiting for? He's waiting for a call from Donald Trump to say, can I put money to work? You know who's not going to invite Warren Buffett to Mar-a-Lago? Donald fucking Trump. So we haven't solved any of the problems that got us here. But still, the trade was a good trade, I think. But again, the trade was a good trade if you take it off. Phil, keep going.
Hey, Tom, how about this this Fred chart here with the market yield on U.S. Treasury securities at 10-year? That was really interesting to me. I'd love to hear what you have to say about it.
Yeah, before we get to this, I think, Keith, if you can go back one chart to number 8, I just want to, we talked about Germany, we talked about Japan. Like, people care about U.S. stocks. I get it.
Yeah.
This is the Vanguard Total Stock Market Index. As you can see, similar to the Nikkei, similar to Germany, same type of conditions, both on the upside and downside. What I want to point out here is we're looking at a weekly chart with the same RSI panel down below. Typically, the first time you get oversold is not the last time you get oversold. If you look at the other corrections that have occurred since 2011, 2015, 2016, 2018, 19, and 2022, what you had is the initial low, a little bit of a bounce, and then we had, kind of chopping around, and then RSI made a higher low, and then we went from there. So we may have found a bottom to start this week, but it does not necessarily mean that it is the bottom. So the one exception was 2020. Obviously, we had the government, we had the Fed come in with the bazooka and basically say, hey, we're going to support everything. And we had every central bank around the world and government doing it at the same time. So that's why we got that V rally. What I'm showing here is there's a lot of potential support. We're in that kind of 9,700 region right now for this index. And there's a reason for it to bounce, but that doesn't necessarily mean it is the exact bottom. So you have to know who you are. If you're a trader, trade the bounce. If you're a longer term investor, like I've been saying, like these are good signals for potential turning points, but it does not mean it's the exact one. So going to the next one, the Fred chart, I think there's a lot of questions around, is the U.S. headed into a recession? What's going to happen with the economy? Because that will impact, the market, housing, etc. So this is a great chart from, oh man, I'm blanking on his name. Anyway, I'll get the reference later, but essentially showing the real yield on the 10-year treasury is still positive. And if we were truly pricing in a recession, we would see this start to, roll over and go negative. So although the stock market is seeing some of the air come out of it at the moment, we're still not at the point where like the bond market and the rest of the world is pricing in a real recession yet. We're seeing cracks of it. Oil is breaking down. We've got, high growth stocks taking on the chin. Like the signs are starting to pile up, but like when you look at the bond market and the real signals, I don't think there's enough recession fear in the market just yet. This is from
It's a
Bob
beautiful
Elliott.
point. It's a beautiful point. The brown nosers, the bootlickers, are pointing to the 10-year rate every tick and going, mission accomplished. The bond market saying, fuck off. You don't know shit. We're nervous. And the other amateurs are saying, well, credit spreads aren't great. You know what happens pretty quickly? Credit spreads can expand really fucking quickly. Go ahead, Phil.
It's Bob Elliott.
Yeah, Bob Elliott. He's
so
got
many
some great charts.
Yeah, there's so many great people on
And I just want to toss in the word that no one's talked about yet is this the contagion word. Okay. One of the things I just want to keep us in mind, given the volatility, is the fear of contagion in the market, bond or stocks. I mean, we know these things happen, but I'm already getting indicators from other charts in terms of the liquidity on trading. Is not just stocks, but especially on the debt side, are getting very light given the uncertainties. And so that raises the risk for contagion issues that we just need to keep in mind. Thank you.
Well, the contagion, Phil, is here. I mean, Phil, you need to speak up a little more because you've just seen so many of these moves. How does this contain? What is the next worry?
Yeah, here's the thing.
What's the next worry for you as a true master of the brain?
Here's the thing. And I said it before, and it is, and I just said it like in passing in answer to a question, but it is so critical. These are processes that remember, like a few months ago, we had that like Japanese thing happen, and the VIX went crazy, the market went down, and then it came back like 2 days later. That is very different than what's happening now. Right now, we are having a major event, and it takes and it is comparable. It's different. It's the mechanics of it are distinct from the global financial crisis and the NASDAQ bubble in 1987. Different details, but the similarities is that this is a huge event that's going to take a long time to shake out. It's not going to shake out in one day with a 4% rally and everybody's like, oh, woo, that was close. It's all over now. That is not. This is going to go on for a long time, and it's going to wear you out, and it's going to make, I have clients who are hedge fund managers who it becomes grueling after a while. 3-day, 4-day event they can totally take. But after 2 weeks, 4 weeks, 6 weeks, 8 weeks, it becomes incredibly grueling, waking up on a Thursday after the market is down 4% and up 3% and down 4% the 3 days prior gets very difficult. So it's a lot of stress. You have to have a plan and you have to be healthy. If you're going out drinking on a Tuesday night and because you're like worn out from a exhausting, very volatile Tuesday, and you're not getting enough rest, and you go in Wednesday ready to trade, you are not ready to trade because it's going to be grueling again. And it's not going to be over from one rally or one sell-off or one simple capitulation event. This is going to go on for a long time. You have to have a plan and you have to take care of yourself.
So, and I'm going to explain that two ways. I talked to my daughter about this and my wife and me. My daughter and my wife were like watching me, and I said, guys, every day next week, this week, you buy a little in your account. And then you do not open your account for 2 years, because you know what? You will be scared the shit out of the headlines for the next 2 years. But I guarantee you within the next 2 years, the VIX will be under 20. It could go to 80 for 3 weeks. It could go to 90. The contingent can spread. But if you buy VIX 45, again, there is the 1% chance that we are in a black swan and Trump wants to bring the whole place down. Okay, we can't account for the 1%. But historically in this country, if profits still matter and cooler heads do prevail, and the system doesn't become a kiss the ring Mar-a-Lago situation, which is what makes this one different. Any purchase you made yesterday and probably over the next 2 weeks of an index, I don't know about individual stocks, of an S&P market cap weighted trend following system will be higher when you wake up one day and you see the VIX at 15. You will look at your portfolio and go, thank God I was greedy when other people were fearful. The other way to do it is the way guys like us do it, which is like, I'm taking everything's a trade. So at VIX 45, I don't care. If I have a profit, I'm slinging it the next day. Okay. But I'm also doing the thing where at VIX 45, I allocated money to Freck.com and I'm not looking at it for 2 years. Okay. And I may look like an idiot because we drop another 20%, but I'm not worried about that. But I think you have to have two mindsets here. All right.
If you're watching this, and by the way, the NASDAQ did not make a new all-time high after the crash of March 2000 for like 14 years. So if you're watching this and you're like in your 60s and like this is like this is your retirement money, that's a very different situation than if you're watching this and you're in your 20s and you have years, 2 years, as Howard points out, and maybe more. You just don't know.
Yeah, and just one thing there. Of Dollars and Data has a great stat on Twitter. The median time for stocks to go from a 20% correction or larger back to a new high and recover that is the median time is 2 years. So it's a process. It's not all V bottoms like we had during COVID. That was a outsized situation. So people have gotten accustomed to, hey, the Fed, the government, everyone's here for me. Now we have the opposite situation where it is the fiscal government causing a lot of the pain and uncertainty. And so the expectation that we're just going to immediately rocket back to all-time highs, I don't think is a good one. So, if, you got to buy the fear, but also strap in for the long haul and, set your expectations accordingly.
Let's get to AI, Phil, or is there something else? Because
let's go. So here's my question for you. This event, Michael, and the tariffs, what is the implications? How bad is it for AI, especially US-based companies in growth?
On a scale of 1 to 10, 10 being pretty bad, I think we're at 15 to 16, and everyone thinks we're at an 8 because the market's down 20% and NVIDIA's a little cheaper and Microsoft's a little cheaper. We're missing the forest for the trees. The fundamental reality of this cycle, tech cycle versus previous cycle, is it was much more front-end loaded in terms of investment to actually make the product that was going to make everything magical with AI. You needed the compute. And we're fundamentally mucking not just compute, everything. When Trump says to 30% on Taiwan, maybe 20%, come and kiss that ring, we'll do this. The supply chains around technology and AI are so complex. What NVIDIA has been doing, Dell's been doing, these companies are doing, are some of the most ASML, TSMC. The technology is the most complicated technology ever created by human beings that require on global ecosystems.
It's not a pencil.
It's a million times more complicated than pencil. And when you make the pencil cost 5 times more in the next 3 years, and I can see it in this environment, unless everyone goes to zero. That's why Elon is arguing 0 tariffs. That is why he's doing it. He is hoping against hope that he can swing the DC into a 0 environment. We don't have any visibility to that, and even then, you've got this president in office for a while, and he is going to be transactional. He's going to be kiss the ring. He's going to want to see his name in the papers. It ain't going to happen. And without that, I am just, to me, Phil, you mentioned 2000. We are so far from 2000. I lived from 2000 to 2002. I left, that's when I transitioned from being 20 years at Goldman to being an investor. The next 5 years were the golden era for investing because no one believed. Yeah. We are nowhere there on AI today or technology, or everyone thinks this is, where do I buy? Where's the bottom? And I can trade this up. And that is fine. You're going to make money trading it. Tom, all those charts are, I think, very, very key. Look for that. Trading opportunities, great. But the bigger picture is that when you've got the top 6 or 7 tech companies on the planet spending $300 billion a year on stuff, and now they're going to get 50% less compute for that, and people are not going to be able to buy the equipment on the consumer side to actually use the AI for 3-4 because it's going to be out of their price range. I'll give you a silly example. Nintendo, okay, something that's degenerate economy, games, etc. They just introduced the Switch 2. What is that? Most people don't know. Nintendo is one of the most successful console games on the planet. 150 million Switches was sold. Just an extraordinary company. They just introduced the Switch 2, which was going to go on pre-sale today, okay, at $450 and $200, $400 with the software. They paused the pre-orders because they said we didn't compute the tariffs from Vietnam and China where we're going to be building these things. The price when they actually come out with this is probably going to be in the order of $600 to $700. Guess what? That means that their cycle that they were anticipating of tens of millions of units for the next 2 years are pushed back by at least 2 to 3 years. Okay. What does that mean? It says this is games. Who cares? But it's just symptomatic. We're taking discretionary spend. At a time when America's economy was one of the healthiest economies on the planet, people were spending. Degenerate, Howard, you're talking about. We have money to spend on golf. We on golf putters and on Manscaped. It's gone. It's people are going to be worried about their jobs and in this recession environment. That is not discounted yet. Everyone is hoping this is going to correct.
Example. I want to invest. People give me money. My job is to put it to work. And why have I not been putting it to work as fast over the last 6 years? Because what I said about Samil, idiots are overpaying. Okay. And so if I can help my investors earn 5%, why would I lock it up? Why, let them hold their money at 5, 6% or in private credit at 8, 9, 10, 11% versus me locking it up for 12 years in a high risk. People are not thinking. Okay. They've never traded. They've never seen what we're about to see, which is the bond market has not told us anything yet. The bond market rules. The bond market is saying jury is out. Besant is even worried now. I mean, he's the smartest guy in that room and he's fucking speaking company line. And so you have the barbell, which I love, which is momentum on the liquid side and value on the private side are both gone. We've always had one. There was always a deal to be had, right? And AI was a great opportunity for people with lots and lots of money like you did and Andreessen to put it into far-reaching things and not stupid little apps. It was beautiful, okay? Even in the interest rate, even in the face of high interest rates. But then they thought that they had a good idea to put this guy in charge because I don't know. But what's happening right now is we've killed momentum on the liquid side. And by the way, people are used to momentum. And then we've killed value on the seed side. So smart money will not put money to work because it doesn't make financial sense to lock your money up for 12 years when you don't know what the world's going to look like in 6 months. That is bad investing. Okay. So you've literally taken the two barbells that have made America great in terms of investing and taken them off the table. Will that bring back value investing in the public markets? Yes. You know what that does? Hedge funds will make money. Stock pickers can make money. Your indexes will go nowhere. Okay. And I don't think people understand how important having value at the seed and momentum at the end, really how good that's been for the economy. So I'm really worried, but it doesn't mean I wasn't putting money to work.
Is there a possibility, you guys, that some deal gets done, that that China and US come to the table and
why would China come to the table? China just said no movies in China. What does China need American movies? What is net? They just took Netflix and Spotify and said, fuck you. Like, we'll put a wall around 10-cent music. They're playing chess, okay, because they have the guy's in power for 100 years. Trump could be out tomorrow. So, I mean, no matter what we say about checkers versus chess, when someone has ultimate power, whether we like it or not, they can play chess. We are forced to play checkers because of the term limits of the president. And he is in, and by the way, they continue to play clips of Trump saying 40 years ago that tariffs are good. What they're not playing is Trump on David Letterman showing his ties from Bangladesh. Okay. This is available. Totally. Trump on Letterman year after year showing off his clothes made in Bangladesh. And you know what Trump's line was? Those people need to work too. That is straight out of Trump's mouth 20 years ago when he was hawking ties. 20 years ago when they were making his ties, they needed work. Today, when it's our businesses, no, you need to pay up and pay the man. These are the most scummy words coming out of a president. Okay. And Letterman outed him. This is not about Oprah and his speech about tariffs. This is about a guy who doesn't understand business. And that's dangerous. He understands it from his very narrow point of view. So I'd say VIX 45, you have to put some money to work, but you also have to realize that it's going to be messy.
I think there is a possibility they come to the table behind the scenes just based on pressure on both sides. Pressure on Trump from the rich people that are getting screwed right now, and pressure on China's side from not having the demand for their manufacturing monster.
What does that do for us if we don't trust how the sausage is made?
I don't know that for a fact. I'm just saying that that's within the realm of possibility, and we won't be aware of it. Michael.
Phil, I agree with you that, is there a possibility of a trade? Yes. Reed Ackman, every day he's coming down with a more watered down version of a 90-day pause and, do this and do that. I got it. Any one of those announced, if he gets Trump's ear, yeah, we saw it yesterday. The market rallied when there was even a hint of a 90-day pause, right? It's hundreds of billions of dollars. We're going to see those moments. That volatility will exist. But the core piece is we've got a transactional president who wants to kiss the ring for the next at least 2 years. And until Congress steps up and says, you don't get this toy anymore. The tariffs are now in our venue, and that ain't happening for a while. Until the punch bowl's taken away from him and this dangerous weapon. We always worried about, the president's got the nuclear button. He had the economic nuclear button, and guess what? He hit it. Yeah. He hit it. Okay. And that cannot be undone.
One more reminder, Phil. He wants to make America great again. His version of America great again is QVC, 1990s Philadelphia, where there was one channel and he owned the channel. This is 2025. We have the internet and we have AI. Okay. And we should be focusing on teaching kids to be creative. You know what's the highest margin business other than IP? The IP up here, YouTube. The fact that we can go watch Tim Dillon, who I linked to today, talk about the markets is fucking, why should Tim Dillon be in a fucking sweatshop? What are we trying to put back in the box? And so you can't put this shit back in the box when you give guys like Tom Bruni Stocktwits and Twitter and a voice and his knowledge, and he should be allowed to make money there, not put his kids in a sweatshop or making iPhones. This is about, we are giving the tools to create the greatest margins, human to human margin, peer to peer margin is insane. And we're trying to put that back in the box to say you should earn $15 an hour.
And we're shutting down all the all the research, basic research the government funds, NIH, the National Science Fund. All internet came because of this. And Mark Andreessen would not, he, in his own words, would not have become Mark Andreessen if it hadn't been for 4 supercomputers that were funded by the government. One of them happened to be at his college, and he got to invent the browser. Rest is history.
Understand
that is gone.
Sorry, Phil. Understand this. I think Trump's okay with the browser. He just wants to get on the cap table. And this is another difference. Okay.
It's his golden chair.
Tom, final word. What do you think of Fartcoin here?
Well, it's been a safe haven. It's actually well off the lows. So I don't know what's going on out there, but it's a trading environment. We had 23 and 24, which were great years for investors, no bumps along the way. And now it's a much different environment. So if you're an investor, hold your nose, invest for the long term. If you're a trader, manage risk, reduce size, and, try to adapt to the current environment.
I like the reduced size idea. That's a good idea. Yeah.
Well said. And thank you for coming in. We should just have Tom more often. I mean, he really, the beauty, the wisdom of the Stocktwits community and the best of it. There's nobody following it like Tom. And there's just a lot of good stuff. I mean, we saw a few of those charts today. There's just a lot of good stuff going on. The Daily Rip, if you don't subscribe to the Daily Rip, you probably should be.
Yeah, shout out to Kevin. He's our new writer. He started last week. He's killing it already. So yeah, building out the team and lots of great content. So let me know in the comments what you guys want to see, and I'll hop back on here whenever these guys will have me.
Beautiful.
All right, boys.
All right. Adios, guys. Adieu.
Peace.
Everybody. Thanks, Mike. Thanks, Tom.
Thank you, everybody.
Bill, good job.